And thanks for joining us here on PM Express once again. And indeed, in the next few days, I think by the end of this week, the finance minister has already said that a high-powered government delegation is heading to China. Why? Because they are on their way to go to China, meet with Chinese executives and officials, try and convince them to come to the table so we can renegotiate our debt. What we need from them is a pledge, it's a commitment that yes, they will listen to our plea to renegotiate our debt. Without China, we can move forward. Without that, IMF executive board approval in March will miss that particular ship as well, which will not mean well for this economy. And so tonight, let's look at this big issue of the next big debt hurdle that Ghana is about now to attempt to overcome the China and the external debt crisis. The Chinese part of this is just one bit of it, but then there's a bigger issue of the whole debt situation that we need to look at. And if you look at the issues that we've already been dealing with in this country since last year, one of the two things we needed to do, there are a few prior actions, but two most important ones when it comes to the debt issue was to do the domestic debt exchange program, which has been done successfully, according to the finance ministry. The next big one is the external debt restructuring, which is a subject of our conversation today. On this show, we've done extensive work on this first bit. This bit is what the country, the finance minister, the president is shifting its focus on. And here on PM Express, the next few weeks, we will hold your hand and walk you through the entire process till resolution. And so stay with me as we begin to look at this. So what is it that the finance minister or this government is attempting to do with our external debt? If you look at the Ghana's total debt portfolio, we're talking about 43.9 billion as of November 2022, according to the Bank of Ghana data that we have. If you break that down, you begin to appreciate why what we've done already with the domestic debt exchange program was just child's play in comparison to what we are about to do with the external debt attempt to restructure that one. Because look at the quantum here. What we've restructured already, just 14.7 billion. And even that was a major headache for government. A lot of issues we saw for the first time, pensioners protesting in this country. We've never seen that before. But that is what we saw with the domestic debt exchange. Now the big one is the external debt. 29.2 billion is what we are attempting to restructure. Now, if you remember, we broke the story on JoyNews on the back of the budget that was read last year, when the finance ministry, the deputy finance minister, confirmed to us that the attempt to restructure this is to impose on our external creditors, the commercial creditors in particular, a 30% haircut on both principal and also on coupons, on interest. That is the proposal. We don't know whether that has changed or not, but we know that government has already started defaulting. But this is the huge chunk of the pie that we are attempting to restructure. You remember what happened to this? This is the domestic one that caused a lot of headache. This one is even more complex, and China is in there as well. And let's break this question down when it comes to China. In terms of our bilateral debt, the finance minister poses our exposure to China to a third, as much as 1.7 billion, the single largest holder when it comes to a country, single largest holder of Ghana's debt is China, 1.7 billion. A lot of them are all in the Paris Club. Even that together is 1.9 billion. And then the rest there is 3.2 billion. So you need them as a matter of urgency, necessarily, to move forward with this. And that is why both Germany and our own President Akufo-Addo, publicly appealing to Germany to help us get China to the table to negotiate. It was appealing to Germany to assist us. You don't see a president do that publicly unless it becomes desperate. And we are in desperate times indeed. No wonder we can no longer use the remote diplomatic channels. We have to fly there, send a delegation led by the finance minister himself to try and get them to listen. Today, we're going to discuss what this delegation should expect here on PM Express, because that's what we're dealing with. Now, the problem with the external debt is that a lot of them will mature this year with just a little over 148 billion will mature this year. We have to pay this in terms of the principal, or we are in trouble. So we are trying to restructure this so we don't get to pay all of this. But the big date to watch is post-2025. What happens in 2025? There will be a new president, a new government in 2025. Whoever takes over after the 2024 elections next year will have to face this big crisis of having to pay $525 million of debt that we owe, the euro, as far as euro bonds are concerned. So this is big deal. This is why the government is desperate to restructure this particular debt. And then you come down to a particular breakdown of our, Ghana's $4 billion bilateral debt. And there you begin to see the Chinese problem. This here is the Chinese bit of it. 42.5% of our bilateral debt is held by China alone. So we can't move forward until China decides to play ball with us. And so we have to go. We have to go and beg. If that's what we have to do, that is what we do. We'll bring you some of the case studies to tell you the story of what China does when you owe them. China, from the research that is available, tend to forgive you if you owe them if it has to do with interest-free loans. I'll explain to you pretty shortly what I mean by that. The Chinese state bank take tougher stance on debt. Some call them, they are predatory lenders when it comes to these matters. And, look at the poorer countries. Look at the portfolio they hold when it comes to poor. They love giving to poor countries for a reason. We'll come to that very shortly. Poor countries face $35 billion in debt service payments to official and private sector creditors in 2022. How much of that is China holding? 40% of the total is due to China. 40% of that alone is due. So Ghana is not the only one exposed to China. A lot of poor countries are exposed to China. But China is not a Shylock. It can be. It has been in some cases, and we'll show you some of the cases very shortly. But they also forgive. Between 2000 and 2019, China has forgiven 23 interest-free loans to 17 African countries, including Ghana. The thing to note about this, though, is to ask the question, the 1.7 billion we owe China, how much of that is interest-free? Because the data tells us that if it's interest-free, we are most likely, possibly, our team leaving to China may be successful in trying to get China to forgive. But if it is not, they are in trouble. But if you look at the global data, as far as the Chinese debt is concerned, it appears that the interest-free loans are small when it compared to the bigger portfolio that they hold, because it's just less than 5%. Less than 5%. That tells you a story already, that we may be holding a significant chunk of the 1.7 billion will not be interest-free loans. And so we are in trouble with this, and we need to get China to play ball with us on this particular subject. Now, look at the exposure. Ghana is a favorite place for China when it comes to doling out loans and lending. If you look at the case in the sub-region, for example, we are second. Nigeria, our big brother, the most populous country, in terms of the to Chinese, 1.8 billion. But it comes to Ghana, over the years, Chinese loans to West Africa between 2000 and 2017, they've given us 3.5 billion already. We paid part of it already. But that tells you we are second in that league table there. And that tells you that we are really exposed to them already in terms of what we see here. And that's it. They're forgiving us a bit of the debt over the period. But that is interest-free. And this is where we sit with 201 million. So China, they can play ball with you when it's interest-free, but when it is not interest-free, we are in trouble. So they're giving us this already. Other African countries, Zambia. So they don't forgive much. I think is what the data is showing. They don't forgive much when it comes to debt. If it's interest-free, they'll play ball, because these numbers are a pale in comparison to the ones that have interest on them, right? But Ghana, they've given us a bit of the relief there when it comes to interest-free loans. Now, some of the examples that we need to pay attention to as we fly to China is Congo, for example, right? Congo went to China because they were owing 1.3 billion of loans owed to China. They wanted to negotiate. They wanted relief because they were in trouble. Do you know what China told them? China only agreed on condition that, listen, we can't forgive you the debt. We will not take a haircut yeah, we'll take a haircut somewhat, but what we will do is extend the maturity, and then we will increase the interest rates for you. The haircut that China wants to take is to maintain a bit of an afro. You can scream off just a bit of the hair on it, but it's not one that we've seen in Ghana where the haircut has been that severe. China won't take that. So in the end, what happens was that the new arrangement increased the Congolese debt to China from 1.3 billion to 1.6 billion. Yeah, you owe me, you want to pay, you want to restructure it, I will extend the maturity period and I will increase the interest rate. So you will pay me more in the long run. So it increased the debt burden for Congo. Instead, China, they don't joke when it comes to the money when you owe them. That's the Congo example. My question is, what will these negotiations play out to be when we sit with them? Would the Congo situation come to play? 1.7 billion? You can't pay? Okay, I will stand it for you. But you pay more interest on the back of it, which means in the long run, we'll have to pay more. I don't know whether this is what is going to be put on the table for us. The guy who you owe sometimes holds a lot of power. And when it's China, it is big deal. Zambia is another classic example. They really held back the Zambia's ability to get an IMF executive board approval for close to 2 years. Many of the countries were concerned of the lack of transparency, the opacity surrounding Zambia's exposure to China. And so there was a lot of hassle and bustle over it until China agreed to come to the table before Zambia could proceed. Could this be Ghana's fate as we proceed to China to negotiate? And then the big ones that we need to pay attention to for me is also key, because we've seen in other areas what China has also decided to do. I want to take you to a country called Laos, right? In Laos, in 2020, Laos owed, China a lot of money. Some put it at several billions of dollars, but they were running into bankruptcy. And so what they did was to say China was breathing down their necks. They were forced to give away part of their power grid. Pay attention to that. Part of their power grid had to go to China. China took the power grid worth $600 million, right? That is a huge amount. $600 million. They had to give part of their power grid away to China because China wanted that and they took this. And then you have the scenario that we also saw in Congo. In a Congo example, Angola is a very interesting one because it is also a very resource-rich country. In Angola, just like Ghana, which also has a lot of resource, and that's what many people are warning that China could do to us. They were taking, oil loans. In the end, China then decides to say, well, you owe me, you possibly have to give me a lot of your oil in return for what you owe me. So at some point in the late 2000s, China, this is 2020, 2021, 72% of all of Angola's oil were being exported to China because they owed, because China had pumped in billions and billions of dollars, sponsoring about 100 projects in all. Does this ring a bell to you when it comes to the Sino-Hydro deal? It's going to come back to bite. And when the finance minister and the team arrive in China, a lot of scenarios will play. Are we going to have the Zambia problem, the Angola problem? I've just illustrated because we have a lot of oil. We have a lot of gold as well. Will China possibly say, pay me back in gold, or I'll take a bit of your oil just to defray part of your debt? Or are we going to have the situation we had that I brought you earlier about Angola, where they will say, I'll extend your maturity, but I'll also increase your interest. You pay more in the long run. So a lot of the scenarios are at play. But it's not only China we have to deal with. We have to deal with our commercial creditors as well. So this is a very complicated matter. And I'll have just the men to help us break this all down after the break. Stay with me. Mark Bohan is a senior credit research analyst with Red Intelligence and joins us on Zoom Dr. Lloyd Amwa is the Director of the Center of Asian Studies and Senior Lecturer at the Political Science Department, University of Ghana, will join us pretty shortly. Professor Godfrey Bokwing is an economist with the University of Ghana, a friend of this particular show. Thank you, gentlemen, for your time here on PM Express. Mark, let me start with you. I mean, the finance minister, Ken Ofori-Atta, described China as the big elephant in the room. I mean, can China, the China factor, can it frustrate our attempt to secure the assurances we need to get the IMF executive board approval? How are you analyzing this particular problem that we are facing with our level of exposure to China?
You should never say never. I think it could, but I think it's important to keep in mind that the Chinese lending, the Chinese part of the external debt of Ghana is very much lower than it is in for instance, Sri Lanka and Zambia. And that's one reason to believe that it should be a lot easier to get a deal. And also, if it's not possible to get a deal with China, for the IMF to deem that they have sufficient financing assurances to get an IMF executive board approval of the IMF program agreed on staff level previously. So I'm perhaps more optimistic than others. I would say that you took up you had the pie chart with the domestic and the external debt, and I would just add that even though the external debt is larger in size, around 80% of the interest payments were on the domestic debt, because the interest rates on the domestic debt was significantly higher, from 13 to 20% generally, if you have the lower end for the T-bills and the higher end for the 15 and 20-year debt, while Eurobond debt generally 8-9%, but a lot of the multilateral debt and also the Chinese debt at significantly lower rates. So I would say that the government has now sort of completed the big hurdle with the domestic debt restructuring, and it should be easier to agree on a debt with external creditors.
Okay, so that's some good news. I like the way you're looking at it. I mean, can we get an executive board approval, assuming we don't get the Chinese buy-in? Is that possible?
Yes, I think essentially the IMF, I think in this case, can deem away that even if the Chinese don't agree to this, they could do that. I think essentially I think it's more likely that the Chinese will agree with a sort of debt reprofiling, just extending maturities of that rather than having a haircut on the debt, and that will be enough to seal the deal with the IMF.
I mean, Professor Bokwing, when you heard the finance minister announce a couple of days ago that we are now sending a high-powered delegation to China to try and get them to play ball, coming on the back of the president himself, also 2 weeks ago, publicly, in an interaction with the German finance minister, literally appealing to the finance minister of Germany to intervene on our behalf and get China to play ball. What's your reaction when you heard the finance minister also now announce that we are now going to fly there?
Well, Evans, good evening, and good evening to our cherished viewers. Well, I wasn't surprised because China is a big player on the continent. 2 decades ago, when the Paris Club creditors were happily organizing sending off parties for themselves on the continent, at a time when Africa needed them most, they were exiting. But China stepped up to the plate and actually financed the critical infrastructure needs of the continent. So you see the Paris Club creditors, essentially US, Japan, and the rest of them, as they were, their interventions were dwindling, China stepped up to the plate. And Africa found China to be a good partner. Of course, the way China itself does its work and all of that lends more to the attitude of the African largely, right? Not a lot more transparency and all of that. But I think we should not look at China within this context with a certain bad image, because they have been very instrumental in Africa's progress in the last 15, 20 years. Okay. Now, the reason China, even though their debt portion is not that much, and yet it's so significant, is that Evans, Government didn't get exactly what they wanted from the domestic debt exchange. Okay, they set out to restructure 137 billion. They ended up working with a universe of eligible bonds of just 98 billion. Take that into consideration. Even with the 98 billion, they didn't get 100% tendering, right? Now, then again, if you look at how Treasury bill rate is going up and the volume, then the net effect of what we had intended to achieve with reducing interest, particularly, and I think Mark mentioned that the domestic debt, you look at it relative to the proportion of the interest payment that is consumed by the domestic debt, you could see that the overall effect isn't that significant. That makes a dollar on the external side very critical. So even though we are talking about 1.7 or 1.8 billion, it looks that significant now. But beyond that, Evans, Ghana is not only looking for debt forgiveness from both Paris and non-Paris club creditors. We are looking for two things. We are looking for one, debt forgiveness or debt restructuring, whatever form it takes, then also assurance of continuous support as part of funding the IMF program. So we are not just asking for China to forgive us of their debt, we are also asking for China to step up to the plate again in helping Ghana to close the funding gap. Why is that important? Evans, if you look at the way the IMF has worked over the years, if you look at the IMF program, it will take more than what the IMF itself could provide in translating the program objectives into actual. So you actually need more than $3 billion when you cost the IMF program. That is one level. If you look at the 2023 budget, it has a huge fiscal deficit. The fiscal deficit tells you the borrowing requirement of the government, okay? Now, given that the government has lost market access on the Eurobond, international capital market, then again from the domestic market, in terms of the medium to the long-term end, we've been priced out. Government has no means of financing the deficit. The only option left now is more of the short-term Treasury bill and then Bank of Ghana actually monetizing the deficit. You've seen already that the IMF has sent a signal that they will not tolerate the continuous monetizing of the deficit by the central bank because of the inflationary pressures that it creates. So what that tells you is that once we've lost market access, and there's no indication that by the end of this year or next year, Ghana is going to go to the Eurobond market. So beyond that, it means that beyond restructuring your debt, you also need assurance of commitment from these development partners, right, mostly bilateral, that in addition to agreeing to restructure the debt or even debt forgiveness, in addition to forgiveness of sins, they are going to provide additional funding in closing the gap. And that is how come China is so critical. Now, if you look at the Paris club creditors and you look at their proportion in here, Evans, it's even not that much.
Yeah.
You look at it.
It's not.
Okay, all right. And they themselves, the Paris club creditors, are stretched. If you look at the fact that they have to commit to sustaining the war in Ukraine and their own challenges, domestic and all of that, really nobody has extra dollar in anywhere to actually come and give to a country like Ghana that, look, you can continue to live your life anyhow, we'll come and take care of the bill. So everybody's contribution is that valuable now.
Yeah.
Now, if you look at how China had placed itself strategically on the continent, really, it's as though we can't do without them now, and we need them on board. But you also need to take into consideration how China views this whole enterprise now because of the global geopolitics. Look at the way the West sought to describe China with their role on the creditor committee with respect to Zambia. Okay, China was a co-chair and all of that. So, and then if you look at the way Ghana itself had also played its part in this global geopolitics with Russia, Ukraine, more or less favoring the West and the rest of them, and looking at the stand of China and Russia and all of that, that already sends a certain all kinds of suspicion.
So
right?
are you suggesting the team that is heading to China will have a tough time getting the Chinese
to play? They have a negotiation skill. You cannot go into this discussion assuming that it's going to be just free for you. You need to understand the dynamics. You need to understand where China is coming from. You need to understand the global geopolitics. You need to look at where China leans towards. You need to look at Ghana's own statement in the past and the rest of them with respect to Burkina Faso and some the comment our president made and all of that. So you need to put all these things within context.
Yeah, and Mark made a point
to get China to the table.
Mark made a point I want to pick your quick thoughts on, and I'll go back to Mark very quickly. And the reason why we are flying to China is because the executive board meeting is in March, and so we need China at the table. The question is, assuming this does not go well, I mean, I'm asking that because of the Zambia example and a delay, can we still get an executive board approval even if we are not successful immediately with China?
Well, okay, I'll look at it this way. Again, in line with what Mark has also said, right? That China is looking at this whole publicity around it, that perhaps on the account of China, Ghana's economy probably is collapsing or something, and all of that. So China itself will also be assessing all these things. But I think that we should look at the discussion more in terms of getting China on the table. Yeah. Because what we are looking from them is more than just they forgiving us of their debt. We are looking for continuous support and funding in closing the funding gap, because the funding gap is huge. Yeah. If Ghana had market access at the international capital market and the domestic, the dynamics will be different. But as we speak right now, we've lost market access.
Yeah. So if China doesn't play ball, immediately, can we still get executive board approval, which really is the holy grail?
I think that there will be other people talking to China. Okay. And China wouldn't want to be isolated within this whole development space and the geopolitics of it and relevance. And therefore, I am expecting that even if they will stretch Ghana, we are likely to get their commitment that they are on board. That is more important
the pledge.
An IMF program now, rather than just saying that, okay, just because you showed up here, I've taken my pen, I've wiped out all your debt, you no longer owe me anything. In fact, that would also not even be good for Ghana. Look, Evans, okay, one day we'll discuss that.
Yeah, so hold on for me on that. Let me bring in Mark. So Mark, both of you agree the optimism is there that we may get a deal out of China. But the conversation is not only about China. We are attempting to restructure a whole host of external debt, and the commercial multilateral bit is also very important. I mean, and Mark, what's the mood among commercial creditors following, we've defaulted now since I think about December. Is there the appetite there among, commercial creditors to sit around the table and restructure our debt?
Yes, I mean, most people have been seeing this coming for a while, even though, I mean, it was only in April 2021 that Ghana could borrow $3 billion from the Eurobond market. But I mean, it's been clear since, I would say, at least a year and a half among the kind of wider investment community where Ghana was heading. And a general view of the people I've talked to, my colleague I've talked to, is that the Ghana will be the easier of the current three cases in the common framework to solve, just because, I mean, mainly because the role of China is relatively small compared to Zambia, Ethiopia, and also Sri Lanka, which is not a sort of common framework case yet. So that's, they're looking, and general view is that the government wants to get this done as soon as possible, and that there'll be, in order to regain market access. And also it's worth keeping in mind that Ghana's debt servicing capacity is deemed by the IMF as being a medium, while Zambia is deemed as being weak. So it means that Ghana is deemed as being able to carry a higher load of debt. So my base case scenario has been for a while a sort of shallow debt restructuring, maybe I think the figure's about 30% haircut on the external commercial debt. It has been my base case scenario, and that they can reach this before the next election. I mean, you need to get it through Parliament, but I think that will eventually be able. But I think there is a risk that Ghana could become a serial debt restructuring case as Argentina and Latin America.
I mean, you have to expand on that for me, that last bit, the serial debt restructuring case. What are you hinting at there?
So Ghanaian governments for the past 15, even 20 years have just been used to operating with a very wide source of financing, and that's why they have been able to run significant budget deficits for extended periods, even when, back in 2010, 11, when first oil come online, you had growth of 10%, but he also had a fiscal deficit of 15%. But I think, even though I think an agreement can be reached on this debt restructuring, I think the new financing will be more sparse. So there is, to get this debt restructuring, you need something that's called the financing assurances given to the IMF. But that is what it means is a sort of a rescheduling of your upcoming debt payments. It doesn't mean that you pledge to disperse new money. So the new money that will come to Ghana is from the IMF and other multilateral sources. And then, I mean, it is a question how much these domestic savers have been taking a very deep hit on their savings, first through the very high inflation rate and then through the debt restructuring, to what extent they will be willing to buy T-bills and T-bonds going forward. I mean, I think some banks, etc., won't have a lot of other alternatives, what to do with a deposit and sticking them into T-bills. But I think, people will be more reluctant when it comes to sort of longer maturities, the T-bill treasury bonds. So I think now, the government, because it has suspended almost all interest payments, which were around half of its revenue, a third of its payments, of its expenditure, it has a big kind of fiscal space to operate with. So that should make it easier to get through 2023. I mean, we've already seen public sector wage increases, which is, of course, was a lot below inflation, so it's understandable. But I think I share the concerns that going into 2024, towards the next election, that the government will be spending more money, and that will also be the case for the next administration, whichever color that comes in.
So the anticipation is that we would possibly have to do another restructuring of what we've already done.
That's my personal view. I wouldn't say this is shared by the market. I haven't discussed it so much with potential investors. Well, what I said is, that the general view seems to be that it's the easier case of the debt restructuring cases to solve, just because you haven't got this big China component in it.
Okay, and you touched on that 30% haircut. And in fact, it was our deputy finance minister who first made that point to me in Parliament, that the starting position of government at the time was that when it comes to the external debt restructuring, we're going to look at, imposing is a stronger word, but negotiating a 30% haircut on both interest and also on the principal for external debt. In terms of what your intelligence tells you, is there an appetite to take that much haircut among the commercial market, Eurobond market?
Yes, I mean, I think some will definitely push against this and look for a higher recovery value. Probably the people that have been invested in Ghana for a longer time, but if you see the bonds have been trading higher since essentially November, but still below this. So I think if you can reach that, I think a high, majority, I would guess a majority of bondholders would accept that. I think it's worth keeping in mind that the majority is only the 2023 Eurobond, which only has an outstanding amount of about 148 million, which is just a very small part of this, that does not have the enhanced collection active clauses, which means these are some new voting rules that make it more difficult for sort of a holdout investor to kind of block a debt restructuring. So I mean, that's what occurred with Argentina a couple of years ago, where there were these holdout investors that stuck nail and tooth against any deal and achieved a very big payout after being, in a 10-year or even longer court battle with Argentina. But because almost all of the Ghanaian Eurobonds have these new updated collective action clauses, I think it's less likely that will happen, because the majority of investors will look to get get quite a quick deal and for these Eurobond to become poor performing assets because at present, of course, they're not paying any interest.
So your prediction is that we can expect that we can strike a deal, definitely, possibly, even if not a deal, like some commitments and pledges before the March executive board meeting?
No, this I'm talking over the next year or so. I mean, I think the executive board approval will happen before that. So
Yeah.
it's slightly different, the rules for an executive board approval with commercial creditors. The government just needs to make what's deemed as kind of good faith effort, which is essentially giving a reasonable offer to the commercial creditor. And the IMF has been quite reluctant to kind of specify exactly what there is because I want to be this ultimate arbiter of in this case. And of course, there's a lot of details that differ between the different cases, so it's hard to nail down exactly what kind of offer this should be. But I think the Ghanaian government will be prepared to do that. I mean, you can, in many cases, argue that they've been less severe with the external creditors than they have been with the domestic creditors.
I mean, Professor Bokwing, I get the sense that there's a lot of goodwill out there in the external sphere of things towards Ghana, even in the midst of our crisis. And you listen to Mark, and he's telling us what the investment community out there believes. So you get that sense that there's a lot of goodwill. But also, just 2 days ago, over the weekend, the IMF boss was making the same point. And you seem to get that goodwill that oozes when you step out of Ghana and go out there, that possibly we might have it slightly easier compared to what we possibly had locally. Well, what's your reading of this, Prof?
Yeah, thank you very much, Evans. From day one, you could see that the IMF managing director, if she had her own way, she would even bypass the procedures at the fund to give our president a deal like yesterday, right? So clearly, the commitment of the IMF is on the table for everybody to see, right? And I'm saying this because if you look at the speed with which the mission team reached the staff level agreement with Ghana, I mean, that was quite very, should I say, too quick. Let me put it that way, right? So you could see a certain posture from the fund that we need to help Ghana. And of course, to also use Ghana as a case study of how IMF interventions help, how timely, how responsive, and all of that. So all of that are on the table. Again, and of course, I agreed also to some extent with Mark that if you look at investors from the global north, right, with excess capital, low yields, and then you look at what they've been getting on the African continent, including Ghana, which sometimes look almost like predatory, right? The appetite and desire is always there to make sure that these markets are functioning well, that they can continue to lend to us. That said, we need to also understand that when it comes to commercial bondholders, the dynamics will not be the same as the way the government treated domestic bondholders, right? Perhaps to a large extent, you could see that domestic bondholders were treated with some level of contempt, right? Okay, so perhaps look at when the government made the announcement of the offer on December 5th, and government was hoping to close out this deal on December 19th. They had to take the pushback from stakeholders and all of that with several amendments and extensions and all of that. You can't apply that same strategy with the external debt, particularly with the Eurobond holders. Whilst the government was successful with the divide and rule approach with the domestic market, the Eurobond investors have already signaled a committee, a unified front, to engage the government. And don't be surprised that when it comes to that committee, they will request for a bit more information. Okay, they would want to understand Ghana's debt situation. They would want to know the debt sustainability analysis, the assumptions, and all of that. They would want to study it also. And I'm sure it's in line with the same reason why Mark is saying that certainly the IMF won't wait for a debt restructuring to end before the board would approve, because this is not like a 2-month issue, essentially, right? And all of that. But of course, what the IMF had signaled from day one was that they wanted assurance, a credible plan with our creditors, that they are on board and all of that. And that may be enough for the board to give us a program. It happened in the case of Zambia, right? The board still approved the program whilst the negotiations were ongoing and all of that. So I think we should be looking at it more from that perspective. But then again, we need to also pay more attention here, because if you look at the proportion, the Eurobond portion is very huge relative to how much we owe to China and the rest of them. Okay, so in terms of prioritization and all of that. But of course, when it comes to the bilateral, multilateral, because of the continuous funding that is required beyond debt restructuring and all of that, is very, very important. Okay, so, and then again, Evans, if we are saying that China will come on board, it doesn't have to expressly be in the form of debt forgiveness, right? They may agree to some kind of debt restructuring and all of that, but of course, we need to understand it. We need to understand the dynamics and what is going on, and we should factor that into the equation also. But this is how I look at it. Beyond the success with external debt restructuring, the IMF is also looking at our international reserves. If you look at where our international reserves is right now, probably it might not be able to take us beyond the 3rd week or so of March.
Of March, yes.
And yes, that. So we need the IMF program like yesterday. So I want to believe that all this discussion, diplomatic arrangement and all of that, a certain level of pressure probably will be put on the IMF, either through their major stakeholder, shareholders like the US and the rest of them, to really give Ghana a program whilst these discussions continue.
Yeah, I mean, and Prof, I think you just hit the nail on the setting head there that we haven't explored enough about our foreign reserves. I mean, we know where it is now. I think we're just around 3 weeks, possibly barely 4 weeks of import cover right now. Now, the executive board
basis.
Sorry, please say that again.
Our international reserves on net basis.
On net basis.
On gross.
You're right.
Yeah.
You're absolutely right. And so that's why we need the executive board approval like yesterday. But immediately we get it. Do we immediately get the first disbursement? Because we need to shore up that reserve. It is the primary reason why we are going. In terms of the timeline of disbursement, assuming everything goes all right and we get it, do we still get it immediately?
Okay, so Evans, there's a possibility of some front loading, right, in terms of the first tranche, which is possible. But the good thing is that if the board gives the approval, the signal it sends to the market and the stability it brings is even good for the stability of the cedi, right? Okay, so for instance, on the 1st of July, when the president made a call to Washington for IMF-supported program, we saw how the yield on the secondary market with the Euro bonds actually narrowed in terms of how much our bonds were trading in excess of US Treasury yields. It narrowed just with the announcement. Okay, it widened again because of the delay and because we were just not ready. We didn't get our program early enough for the fund to consider and all of that. So, and then also the real import of the IMF program is also the policy credibility it brings immediately, right? That is actually more than the $3 billion that we will get from the fund and the fiscal discipline that is expected. That would also convince investors, even for those who are hoping to move their money out of the country, or even those who want to re-enter the market. Usually, they would want to look out for more of short-term investments so they can benefit from repricing and all of that. So it comes with a whole package. And by the time the board approves, there would be some level of discussion in terms of other multilateral support from the assistant institution like the World Bank and the others in terms of funding or closing the gap. And therefore, I think a program approval is very critical at this stage.
Mark, you've given us the optimistic view from the external market, etc. Give me a sense of, however, what you see could be the potential challenges that we can anticipate, Ghana can anticipate in this process of trying to restructure our external debt.
Yeah, I just wanted to mention that the current account was actually in a surplus in the fourth quarter of last year. So even if international reserves are low, I would expect them to actually start increasing. I think they've hit the bottom. It's worth considering. I mean, they've suspended the interest payments, and that was more than $1 billion annually. So at about a third of the current account deficit in 2021. So I would expect them to come up. I think, yeah, I'm also a bit skeptical if the IMF will front load the disbursements in the program as they've done in some other cases, like in Ukraine, because the previous IMF program in 2014, 2018, there was a bit of bad blood. There were some issues with the central bank financing of the deficit then, and the IMF seems to be on board with the sort of emergency central bank financing at the end of last year. But I think I would agree with Professor Bokubin that they probably want this central bank financing to be phased out as soon as possible. So I think that is a potential issue if the government is not able to kind of use this advantage of the suspension of payments and control that and actually operate on more of a sort of balanced budget, because I mean there'll be some funds coming in from the IMF, probably also the World Bank, but it's not going to have access to the same kind of financing sources it will has had historically over the past decade. So it's just a question of fiscal discipline, especially going into the elections. I think it's also the confidence of the domestic investor base that there might be dollars in the economy, but whether they will actually be submitted to the central bank and to be part of the FX reserves is a question. I mean, my colleagues have looked into the question of cocoa bod. Of course, you have, is this very important body actually solvent, and will people sell their beans to cocoa bod, or will they prefer to smuggle them into Cote d'Ivoire, where the purchasing price is now higher because of the weakening of the cedi? So those are some of the issues, but I think it's mainly on the fiscal side. I think there is a risk there's some kind of holdout investors, but I think because of these holdout creditors among the Eurobond holders, they will look to get a better deal, a better recovery value, will maybe point to China if there's just, China does not accept to the principal haircut as a means to oppose the deal to try to get a better recovery value.
And Prof, very finally to you, I mean, so what's your own, when you look at now we're about to now move to the external debt restructuring, we go into China because we believe China is the only sticking point here. If we get them on board, we're possibly halfway there. If we look at the entire process of attempt to restructure external debt, does it fill you with optimism that we can get a deal very quickly, less acrimonious? Because we've seen very terrible external debt restructurings, like we saw with Argentina and elsewhere. Like Zambia struggled a bit. In Ghana's case, from everything I've heard tonight, I don't get a sense that we are going to have it that bad, and that this is possibly going to be less of a challenge than what other countries have experienced. Is that your verdict on this as the team leaves for China and begins the process of restructuring entire external debt?
Yeah, Evans, I lean towards that. And I'm judging this also from the posture of the finance minister. You could see from day one, when they made a call to the IMF that, look, they want to get a program as quickly as possible. On the back of that credibility, go to the international capital markets.
Okay.
And borrow. So that would also influence the approach government would adopt, that we don't need to mess up the reputation and the image of Ghana in terms of the strategy we want to adopt, so that we'll be able to go to the international capital market as quickly as possible. So we have that at the back of our mind. That would also influence the kind of strategy that we adopt. And I agree, the Ghana has taken the first important step, which is also good. And I think Mark mentioned that, and I agree. which is also good for preserving our reserves. We have suspended interest payments, right, taking advantage of the debt service clause and all of that. At the end of the day, if we are done with the restructuring, investors may go home with the NPV neutral or NPV negative, which works to our advantage. If it's NPV neutral, perhaps it's a zero-sum game to some point, right? So I think that we have that and probably will be guided with that. What is important now is how we can secure their commitments, okay, to the table. And I believe that we need that in order to have a package that can help enable the IMF give us a program. And then the details can be ironed out
later. Prof, thank you very much. Mark Bolang, thank you also for joining. He's a senior credit research analyst with Red Intelligence. Enjoy the rest of your evening. And we watch and we'll bring you an update if we get it from that team that is set to leave later this week, hopefully Friday or Saturday, latest by the end of this weekend. They should be away in China, led by the finance minister himself, to try and negotiate a deal with China. As you've heard, there's goodwill out there. And so hopefully they'll come back with a deal that then paves the way for an IMF executive board approval. Enjoy the rest of your evening.